All right, welcome back. I don't have to tell you by now that the markets really liked that CPI report earlier today. You just heard all those equity indices that we reported on, right? Rate cut hopes have risen as inflation appears to be muted, or at least more muted than they thought. But even without this data point that we got today, my next guest, he was still pretty bullish on equity prices. He lists his 4 reasons as to why he holds this view. I'll spoil some of his research because he too believes that rate cuts are in order. Today's data will go a long way in confirming that. He also believes that smart institutional money is still behind the 8 ball. There will be some splaining to do, Lucy, if these money managers don't get on board. He also goes into depth on the Trump-Putin meeting. I think this is interesting. He says it plainly like this. The irony is that the markets are really not even remotely positioned for the talks to succeed. That's interesting. Let's get him on to tell us the rest of his secrets. Please welcome to the show, Mr. Keith Fitz-Gerald. Before we got all the news this morning, Keith, we got your notes last night, and you were bullish, and you gave us 4 reasons why. I liked them. Maybe you want to repeat them, and then I do think that's very interesting what you had to say about the Trump-Putin meeting. So the floor is yours.
Oh, my goodness. Thank you. You're very kind. So there's a couple things running, right? The Fed is probably going to cut one of these days, but they still haven't gotten in on the action. It's officially FOMO season because many of the great stocks are taking off out of April. People can't deny or ignore that, except for, evidently, number 3, the institutions who are still on the wrong side of the trade. Every time we have a call with some of these institutional folks, the consensus view is it's too expensive, it's too ahead of itself, it's too narrow. It's like that almost a de facto giveaway that the market still has room to run. And finally, there's trillions of dollars on the sideline that is looking for a home. So all of that has got to be forward looking as we come into 2026, where the greatest themes of our time are still putting money on the table.
All right. I love what you just touched on. I think the 3rd reason there is you said that there's a lot of people that still think institutionally that it's overextended. They don't like these PE ratios. And I think that's really important to bring up because that's a psychological aspect that really goes unmentioned a lot of times. That, we talk about these stocks climbing a wall of worry, and you kind of need that wall of worry there for them to climb. So when you do finally have all the bears or the people that think the market's going to go lower get on board and think the market's going to go higher, that's when these things usually peter out, right? So I always think it's important that you keep the naysayers in the market. You keep the people that are betting against the market in the market because psychologically that gives the market a chance to run higher.
Well, it also provides fuel, right, for anybody
Yes.
who has a logical, strategic, long-term framework and can see past the noise. They can, like a duck with water, let it roll off their back every time there's a short-term angst. I've been doing this 45 years, like you, Scott, many decades. I cannot recall a singular time where I've seen so many institutions unilaterally on the wrong side of the ball here.
Yeah, and like I said in the monologue, they're going to have some explaining to do.
Oh, come bonus season, if they want them, are they going to have to answer to clients who say, well, why don't we own X, Y, and Z?
Right, and those that kind of goes along with your last point about all the money on the sidelines. There's trillions of dollars that has to, that doesn't all have to be deployed, but it's still late to the party. And I don't know. I mean, I said it before on this show. Maybe I'm a little bit hyperbolic, but I feel as though that late March, early April, when Liberation Day came out on the 2nd of April, there was a lot of I would have called smart money or big institutional money that I really used to really respect. They voted with their politics, and boy, it didn't work out for them.
Well, not only did they vote with their politics, but they made and I'll dare to say it, they made some really stupid decisions. I saw a lot of them browbeating everybody else into submission, wagging their fingers, pounding their chests as the markets descended to new lows in April. I looked you straight in the face and said, no, this is an opportunity to buy, as did many other people who watch your program. Okay, logically, let's take a deep breath, let's get through it. The smart money isn't so smart. I mean, they predicted 10 out of the last 2 recessions, and here's another one.
I love that. Yeah. Okay. Real quick before you go, we got about 2.5, 3 minutes. Trump-Putin meeting. You say it's widely underreported that there may be some success here.
Well, not necessarily that there may be some success, but the markets are not pricing in the possibility of success. One of the things, again, learning this a long time, everybody constantly worries about what's going to go wrong. People say, oh, it's slim chances of success. Putin's photo op. They're going to do this, that, and the other. Well, the optics are he wouldn't be at the table if the two of them didn't want to make a deal, right? So it doesn't matter who started it, who got him. They're both going to sit down. And the markets are not pricing in what happens if they actually come to terms. So maybe there's success. I think either way, defense stocks are going to be very important. I think technology stocks in particular are going to rocket higher if we have any kind of detente that emerges, whether or not Zelensky's actually there.
You mentioned defense stocks. That's it hasn't been widely reported. You're right. They could see some decent upside. And one of the other reasons why, and I've said this before too, with what Trump did with NATO and the spending that has to be going up from 2% to 5% of their
huge tailwind.
Yeah, I mean, that has to help those defense stocks, doesn't it?
Well, it does, and particularly if you look at the right stocks, and I'll just leave the names out of it for a moment, but the right stocks are keenly involved in AI and targeting, identification of friend or foe, data and position, AI, inference, defending our space. I mean, there is a lot of stuff that's going to move, and having the European tailwind in play is going to be great for these big global names. I'm
going to give you a chance for an attaboy and a little bit of a flag wave, but you were on the air, maybe it was last week, we were talking about a stock that was trading, I think around $160 maybe one, and you said it can go to 200. Why don't you review us, or let us all review what you had to say and why and what stock it was?
Well, you're very kind. It's, of course, Palantir, which we started talking about in the low single digits. And people told me all along, no, this can't possibly go up. It's vaporware, it's this, it's that, and the other thing. Well, you know what? The dang thing's nearly at 200, a price target I put in place over a year ago when most people couldn't even spell Palantir. So it's very humbling to get one right. We could easily have been wrong, but we weren't. And so I think it goes a lot higher. Okay, so you're not going to sell at 200 then? No, I'm not, and I hope I'm smart enough to buy more. I love it. I mean, you're convicted, and you're right. It was, it's gained a lot in the last week or so since you last came on the show and said it's going to go to 200. It was maybe it's 165 or something when you were set up. But anyway, I thought I'd give you the chance to take a little bit of a lap. Thank you. Congratulations. But I appreciate you coming on. We can't wait to hear what you have to say next week, Mr. Fitz-Gerald. We'll see you then. Keith Fitz-Gerald coming to us from Seattle, Washington. Thanks for